I've got some mortgage payoff strategies that you need to know about. If you do want to pay off your mortgage, this video is for you. This is one of my favorite topics to talk about. So today I'm going to share everything I know. You're going to learn about different strategies that you can use, which one is the most effective if you're serious about making progress, and what you should consider doing before you start paying down your loan. So if you're ready, grab a pencil, paper, and let's get right into it. So first, why would you want to pay down your mortgage early? Well, there are a number of benefits, of course. Mainly when you pay down your loan early, you save a boatload of money that you'd be paying in interest payments. Plus, paying down your mortgage allows you to reduce your overall expenses, build your equity, lower your debt load, and free up funds to use for other purposes. Whether you want to use that money to invest or simply want to have less debt, paying off your mortgage can afford you more options in your life. Now, I've been talking about mortgage payoff strategies for almost a decade now. Heck, I've even written a book on the subject. But I've noticed this topic gaining a lot of popularity in recent years. This is because the pandemic reshaped the way people thought about staying at home, living at home, paying off their mortgage. And data from the Pew Center actually found that Americans since 2017, more Americans find meaning and value in issues like financial independence, which is great news. So now let's talk about the mechanics of how to pay down your mortgage. Okay, first strategy that I want to talk about that most people know about is simply paying more. I know it seems obvious, right? But even making one extra payment a year on your mortgage can actually make a significant dent in your balance. This is a popular strategy and it can be done in a few different ways. You could make a lump sum payment or pay an extra 1/12 of your payment every month, right? You're breaking that whole payment down into a 1/12, 12 months in a year, right? Going this route can actually shave off about 4 to 5 years of the life of your loan. I know it sounds crazy, but it's true. You're essentially cutting a 30-year mortgage down to 25 or 26 years. And then, of course, the more you can put towards the balance, the faster you can cut down the time that you're tied down by your mortgage. And I'm talking paying the principal balance. And it's really important that when you make that extra payment, that you designate to your mortgage company that this payment is going towards the principal balance. Sometimes they'll just dump it right into your account and don't designate it as principal balance. They'll just put it towards the interest payments. You don't want to do that, okay? But if you're really serious about slashing the time and the interest on your mortgage, then you're going to want to consider this strategy. Now, I wrote about this in my book. The book is called How to Pay Off Your Mortgage in 5 Years. That's right, 5 years. I'm telling you, this can be done. We have many testimonials from people who followed this strategy and have done it. The book is on Amazon. I encourage you to pick it up. It's the blue cover one, blue cover. There's a couple of other like copycat people that have written books. They like kind of stole our book. And anyway, ignore those. My name is Clayton Morris. So that's the author, Natalie Morris, and it's the blue cover. Pick up that copy of the book. It's about 100 pages long. You can read it in one afternoon. So if this piques your interest, I'd encourage you to pick it up. And it really dives deep into the concept and gives you charts, examples, spreadsheets that you can use to download and look at your exact scenario. But at a basic level, this strategy entails you using a HELOC to pay down your principal balance on your mortgage. Now, a home equity line of credit. Now, the reason this strategy works is because a mortgage is amortized, okay? Meaning the value of the home is gradually paid off. Typically, on a mortgage, you're mainly paying off the interest for the first years of the loan. And then you don't make much progress on the principal balance until much later. But if you can take a large chunk of cash and fire it at the principal balance of your mortgage, you can cut down on the time and the interest of the loan. Again, if you want a step-by-step playbook, grab the Kindle version of my book. It's less than $5 right now. I think we're selling it for $4.99. Okay, best $4.99 you'll spend this week, I guarantee you. I'll link it in the description box below. Now, no matter how you go about paying down your mortgage early, it requires dedication and persistence. So in the long run, it's worth it if this goal is what you really want to achieve. You might be thinking, Clayton, I have one of those historically low interest rates, though. It's like 3.5%. Why would I want to pay off my mortgage? And you might not, okay? Like anything in the realm of finance, this is a deeply personal decision. You might not want to pay it off. It's totally up to you. But you should definitely factor in things like your interest rate, your other debts, and the goals that you're making when you're making this decision. Another reason why you might not want to pay off your mortgage, frankly, is because it takes a lot of discipline. If you're the type of person who just doesn't have discipline, you might want to not do it, right? If you really want to accelerate your mortgage payoff and get it done in 5 years, you're going to have to buckle down and get serious about it. You're going to have to follow through on this month after month. We'll get back to the video in a second, but look, your money is not safe. You can see all the time that stocks can crash, bonds lose value. Anything that you can't physically put your hands on increases your risk right now. Hey everyone, I'm Clayton Morris, longtime real estate investor and founder of Morris Invest. And my favorite tangible asset is real estate. It consistently outperforms other asset classes. And I believe it's the #1 way to build and protect your wealth. Now, while there are several ways you can invest in real estate, most of which I've tried myself, the build to rent model offers the most benefits. More specifically, single family buy and hold rentals. Here's why. Much lower risk than trying to flip a house. You have more control and higher returns than REITs. If you're investing in the stock market, it's way less work than wholesaling properties if you're into wholesaling. Many fewer repairs and headaches than trying to rehab a property. My company, Morris Invest, along with the help from our partner at Sedera Wealth, helps you invest in build-to-rent properties as easily as investing in stocks. That's because we buy and build in bulk, and then we pass on our savings to you. And when you purchase a property through us, you get discounted pricing on properties at or below market value. Seller incentives like mortgage buy-down rates and credits right now usually lowers your rate by about 1%. And we know with higher interest rates right now, you definitely want that, right? And you get free ongoing customer service for the life of your investment. Get personal phone numbers and email addresses of our team. And build-to-rent properties are in prime growth markets. We're talking 18% internal rate of return. 18%. Amazing tax benefits. And you get a free cost segregation report, helping find strategies that increase tax write-offs. You get principal reduction as your tenant pays down your mortgage. And you get steadily growing appreciation and equity gains. Plus, positive cash flow. We won't sell you a property if the math doesn't add up. If you want to know more, just click the link in the description box and it'll take you to our website where you can book a free call with our team. There's zero pressure, no obligation. Look, I understand we won't be a good fit for everybody, and that's totally okay. Some of you might want to be DIY, you want to do it yourself. That's great. Either way, you're going to walk away from our phone call with some valuable new insights and an idea of what questions you might want to ask and some actionable steps that you can take to move forward in your financial journey. You can always find an excuse to not invest, but the sooner that you start a smart investment like build-to-rent real estate in a strong market, the sooner you'll be enjoying pure cash flow. So click the link below and I hope to see you on our schedule. Not only will you have to make sure all of your dollars are going to the right place, but you'll also have to keep on top of your lender and make sure that they are applying your payments to the principal balance. Every month, check that statement. Did they apply it incorrectly? Get on the phone with them and yell at them in a nice way, but make sure every month that extra payment you're making is going towards the principal balance, not the interest payment. If you don't specify that, I'm telling you, it's not going to work. You're not going to cut down on your interest. In my opinion, it is well worth it, but it's not necessarily mindless or automated. Ask yourself what priorities are in life. Because if you're not 100% committed, then perhaps it's not the right time for you to take on this type of strategy. So if you need more clarity on whether or not paying down your mortgage is the right move for you, I'd love for you to check out this next video where I discuss setting your financial priorities and how to make the most impactful decisions for your unique situation. That's hard to say. Try saying that 5 times fast. Your unique situation. Thanks for subscribing to the channel, and we'll see you in the next video.